Okay, in this video, I'm going to teach you the fastest way to become a profitable trader. And I spent years learning how to trade, and I made it years longer than it needed to be. I've done it all. I've traded stocks, futures, forwards, options, penny stocks, everything. And in fact, if you really do pay attention and you watch to the end of the video and you take notes, there's no reason why you can't be profitable at the end of the year. Because in reality, being a profitable trader, it isn't as hard as people make it out to be. I'm going to simplify it for you, and I'm going to teach you everything that you actually need to know so you can start making money as soon as possible. Okay, so the first thing you need is the bias, the trend, the direction, whatever you want to call it. You just need to get the direction of the market right, because let me tell you something, if you can get the direction of the market right, you're 90% of the way there. So we're on the daily chart here, right? And this is our higher time frame analysis. You know, people will call this daily bias, whatever you want to call it, right? We're on the daily chart, and what we're trying to do is we're just trying to predict where price is going to go on the higher time frames, because these markets only move on the higher time frames, right? Because smart money, those who have billions who actually move the market, they're trading on the daily and, you know, at a minimum, the 4-hour chart. The absolute crucial thing with ICT trading is that regardless of the time frame you're trading, even the 1-minute chart, you always trade with the higher time frame direction, because that's the highest probability in trading. And trust me, from years of experience, that's absolutely true, right? If you just trade in the direction of the higher time frame, you will save so much money. You will have much higher win rate, and, you know, you'll become profitable. You will become profitable. Price doesn't move in straight lines. Now, what do I mean by that? Right, trading isn't like this. Price doesn't just move up like that and then move straight down like that. Right, what normally happens is when we're bullish, is that price will move up, give us a retracement, move up, give us a retracement, like that. And then when we're bearish, it will give us a retracement, like that. Right, that's what we usually tend to see. And if you look on the weekly chart on dollar, there's been no sort of retracement. There's been no sort of retracement, and we've got this fair value gap here. Right, we've got this fair value gap here on the dollar, right? So it is likely, right, because we've had such a large movement up and that we've taken out this liquidity, it is very likely that we're likely to see some sort of retracement. And remember, we're on the weekly chart here, and all analysis starts on the weekly chart. And the reason it does that is because smart money looks at the weekly chart. Right, the weekly chart is what smart money is actually looking for, because this tells you the higher time frame trend and what smart money's intentions actually are. So it's very likely that we're going to have a retracement into this fair value gap here. And then after this, you know, price could either go up, or, you know, it could break through this fair value gap and continue lower. At that point, you know, we want to wait to see how price reacts in. If price wicks into this fair value gap and it instantly shoots off, that tells us that we're still bullish. But if price starts to, let's say we get big bearish candles closing through this fair value gap, that tells us that we're bearish. And another thing, this is absolutely key and something that I've missed out recently. An order block that forms inside a kill zone is super high probability. Alright, so write that down again. An order block that forms within a kill zone is super high probability. So this right here, this is before London, right? This is, you know, Asia's ended, but London hasn't started yet. That's not really a high probability order block. This one's high probability. This one's really high probability, right? I mean, look at it. We tap it, drop massively, and then look at this one. Price comes in, comes to the order block again, and then massively drops down. Right? Massively drops down, because these formed in London. So these are London order blocks. Absolutely key. And yeah, so let's say you want to enter on this order block, right? Price has come down. You want confirmation. You've got your confirmation. This is the 4-hour order block. What you're going to do, enter on the body of the order block like this, right? Like that. Put your stop loss at this swing high here, right? Absolutely fine. And then target a 2-to-1 minimum or a 3 risk to reward ratio, which you just get. Okay, so the first thing we want to see is a liquidity sweep. I talk about this all the time on the channel, but we always want to see a liquidity sweep. Now, what is a liquidity sweep? A liquidity sweep is, let's say you've got some highs, right? You've got some key highs like we have here, right? We've got highs here, and we've got highs here. What we want to see when we're bearish is we want to see price come up like this, take out these highs here, instantly reverse, come back up, and ride price down. That's what we want to see, right? We want to see a wick that pokes up like this, takes out some liquidity, instantly reverses, ride price up, and then continue it down, right? That's what we want to see. Nice and easy, high probability setups. We always wait for a liquidity sweep, because if you don't wait for a liquidity sweep, you're going to get swept. And how many times have you got the bias right? How many times have you known that it's going to be bearish, right? Let's say you shorted here, you shorted up. Let's say this fair value gap. Price comes up, takes out your stop loss, and then goes off about you like this, right? How many times that happened? It's because you don't wait for a liquidity sweep. And London session itself is characteristic, right? This is a key thing that London does. It always has a liquidity sweep. It always has a major liquidity sweep, and then it moves in the opposite direction. A lot of people are actually asking me this. How do we know that, let's say this order block here, right? How do we know that price isn't going to go for this low? How do we know it's not going to come down and take out this low? Because surely there must be liquidity here. There's 2 reasons, right? The first is we're bullish. Right, we're bullish on the higher time frames. Very unlikely that price is going to come down here. And the second, and this is the most important part, because this took me for ages to understand, is we have a liquidity sweep. Now, what is a liquidity sweep? If we're bullish, right, if we're bullish, lots of people are going to be buying, right? They're going to buy, they're going to put a stop loss at key lows. They're going to put it at this low, they're going to put it at this low, and they're going to put it at this low, right? What we want to see is some of these lows taken and then quickly and aggressively move in the opposite direction, right? When we see that, that tells us a liquidity sweep. And a liquidity sweep really is just a fake move. So let me just mark this out here. Right here is a liquidity sweep. And this is so important. This bit is so important because most people, I'm just going to write LS for a liquidity sweep. Most people can understand the liquidity part. They can understand the direction, but they still can't make money. They still can't enter consistently. And this was me for almost a year, you know. Like, I could predict the markets, I could get the liquidity right, but I just couldn't, you know, I just couldn't get the entry right. I couldn't get the entry right because, like I said, every time I'd enter and I'd be bullish, price would come out, take out my stop loss around here, and then quickly go to my take profit. And then when that happens, you start revenge trading. You start buying all the way up here, and then price continues down like that, right? And you just lose money, you blow accounts, and it makes you want to quit trading. It genuinely makes you want to quit because you're not looking at the right thing. So we've got our liquidity sweep, which means that this move here, the only reason this candlestick went down here was just to take out these lows. Just to take out these lows and then instantly reversed, right? So that we just came down here only to take out this low. Only to take out this low. That's why we call it a liquidity sweep. Only to take out this low because there's liquidity there. Quickly move up, and then we want to enter in a retracement and ride price up. Right, that's essentially what trading is, and that's how you actually use liquidity. And every profitable trading model, you know, that has a decent win rate is built on this in one way or another, right? And you know, ideally, you don't need to use indicators, but the entry plan is the least important thing. You notice how I've not talked about any specific entry yet, because it does not matter. If you've got this, if you've got a liquidity sweep, and you've got key liquidity, which is in the higher time frame direction, it's that simple. That simple. Any entry plan will do. You're gonna put your stop loss at the liquidity sweep low, right? This candle here, that was your liquidity sweep. That's where you're going to put your stop loss. Now, why do I say put your stop loss there, right? It's very, very unlikely that if price was bullish and this was a liquidity sweep, that price would come down here, take out this liquidity, move up, come all the way down, take out your stop loss again, and then quickly move off, right? Do you see how unlikely that is? That if you're bullish, that price is going to come all the way down, take out your stop loss again, even though that this was a liquidity sweep. It's very, very unlikely that you're going to have two liquidity sweeps in a row. So it's very safe for you to put your stop loss here. Now, I'm a big believer in having a safe, wide stop loss and targeting a 2 or 3 risk reward ratio because your probability of winning will go up massively. And yeah, what we do is we target a 2 or 3 risk reward ratio. So 2 risk reward here or 3 risk reward there, right? And you get a 3 risk reward ratio. But for me, the affirmation now has changed because I'm a profitable trader. It's I am so happy and grateful now that I'm a 7-figure trader who consistently gets payouts, right? That's a pretty nice affirmation, isn't it? Because, you know, if you keep saying that long enough, it comes true. So, you know, you might be a profitable trader, right? But you might get scared, you know, when you do prop firms. Right? You might get scared. You might be, oh, you know, it's a lot of money. It's a lot of money. And it is a lot of money. You can have an affirmation of, I am so happy and grateful now that I'm a funded profitable trader who consistently and easily gets payouts. Right, if you say that and you write that down, I guarantee you within a month you'll get your first payout, right? Because you know, all it takes is literally about 2 to 3 weeks. Let me write this out. All it takes is about 2 to 3 weeks, right? 2 to 3 weeks of doing either affirmations or visualization. If you do both, like within 2 weeks, bam, everything will change. Everything will change, and there's no harm. There literally is no harm. It takes like 10 minutes a day. Just write this out. I'm so happy and grateful now that I'm a profitable trader. I'm so happy and grateful now that I'm a funded profitable trader who consistently receives payouts. You know, and obviously change it to whatever you want, but make sure you have I am so happy and grateful now that I am, and then whatever you want afterwards, right? I am rich, you know, I am wealthy, I am confident, I am sociable, I have lots of friends, I'm attracted to women, you know, all that sort of stuff. Or anything after this will come true as long as you get emotionally involved, as long as you feel the positive emotions with it. And yeah, by law, it comes true. I think this honestly blew my mind. Blew my mind when I've done it, and I'm using it from literally everything in my life, and it's working. And yeah, really good, really good. I hope you enjoyed the video. If you did, make sure you like and subscribe, and leave a comment. Let me know like what you actually think of this, or if you think I'm crazy or anything. But yeah, and of course, you know, if you genuinely don't understand technical analysis, if you don't know how to trade, if you haven't got a trading model, there's a full course, link description below, and it's on sale, so you may as well check it out. But other than that, I'll see you guys in the next video. Peace.